Hi, everyone, and welcome to our weekly broadcast from Spark Rental. Last week, we talked about the legal liability because of this pandemic, which is supposedly getting worse now in the United States, and the legal liability for landlords. And hopefully that will be helpful to those of you as this time seems to be rising again. This week, Brian is going to talk to us about what states charge and where are the lowest property taxes, which is kind of important when you're a real estate investor. So with that, I also ask you all to please share your comments and just participate so that we're not just talking to air and each other. We talk to each other way too much. And let us know where you're checking in from. So, Brian.
Yeah, and the property taxes where you live and where you invest.
Yeah, that would be awesome.
Yeah.
And I have to just interject here. Brian created these maps, and they're awesome. I was playing with them, and we're going to share the link, but you guys should play with them too. They're a lot of fun, and it's quite interesting, very eye-opening. But anyway, I shouldn't have given that away. Brian, tell us about state versus county levels as far as property taxes are concerned.
Sure. So I shared that link in the comments here for we've got a couple interactive maps that we created for property taxes, both at the state level and on the county level. And by the way, we've got Mary Jane here, who is tuning in from the Sierra foothills of California.
Welcome.
Yeah, absolutely glad to have you with us, Mary Jane.
How are your property taxes over there?
Yeah. Let us know about what kind of property taxes you guys are paying around the country here. So before we jump in here, it's worth noting that property taxes are typically assessed at the county level. So when we talk about state property taxes, we're talking about averages across all of the different counties within that state. So average property taxes within that state, because each county does set its own property tax rate. Now we created an interactive map for both property tax rates at the state level and property tax rates at the county level. And property taxes can vary widely within the same state. So one quick example here, in Pima County, Arizona, they charge 5 times more than the tax rate in Apache County, Arizona. So Pima County charges a little under 1%. They're at 0.96% of the property value each year is what they assess. And then in Apache County, a couple counties over, they charge 0.18% of the property value. So a really low rate.
Would you say that rural versus suburban versus city has a lot to do with that? Because I know where I am, the further out in the country you go, the taxes definitely decline. And then we're in like a really Philly suburb where the taxes are like crazy.
Yeah, no, that is a trend. It's not a perfect one-to-one correlation, but you can definitely see that as a pattern where urban areas tend to charge higher tax rates, and then more rural counties do tend to charge lower tax rates. So that's true, and that actually you get a double impact from that on a property tax level because home values tend to be higher in major metropolitan areas. Mm-hmm. So not only are they taxed at a higher rate typically, but you also have higher home values, so you get hit twice as hard with your annual property tax bill.
And it's all a way out because more people tend to flock to the suburbs, than the rural areas. So.
Yeah. Now, one other thing that's kind of interesting to note here, just while we're talking about the state versus the county level. So you do see clear patterns across states with property taxes, because some states charge more in income taxes or more in sales taxes, and then they charge less in property taxes, or vice versa. And of course, some states just charge less in taxes to begin with and keep a lower state budget. And, sometimes states will collect money in the form of income taxes and then distribute that money to the counties. So counties charge less in property taxes. But some states just charge a much higher tax burden across the board, and we'll talk more about total tax burden in a few minutes. So by total tax burden, we're talking about a combination of property taxes, income taxes, and sales and excise taxes. And by the way, if you're not familiar with the term excise taxes are on specific goods or specific services. So, for example, gasoline taxes are an excise tax, or tobacco. A lot of states charge extra taxes on tobacco or alcohol, things like that. So,
just curious,
so when you're comparing
a place like Delaware, right? They have low property taxes and no income or low income taxes, right?
Well, and Delaware actually is famous for charging no sales tax as well. So Delaware, it's funny you mentioned Delaware. Delaware has the second lowest total tax burden in the country, which is why a lot of companies put their headquarters there. Delaware also protects business rights legally better than most states do. And it has worked for them. They've attracted a lot of company headquarters there in Delaware. Yeah. But yeah, so when you're comparing taxes, if you're considering moving to another state and you want to compare taxes, you really have to include all of these different types of taxes to get that total tax burden picture. Because, I'll use Texas as an example here. So Texas has relatively high property taxes, but they charge no income tax. So if you just look at property taxes and you base your decision on where to live on just the property taxes alone, then you'll miss out on the fact that Texas actually has a relatively low tax burden, but they're charging more in property taxes because they're not charging income taxes at all.
Now, as an investor, should you be real concerned with the income tax?
It depends. As an investor, you should be most concerned about property taxes, most likely, because that does impact your cash flow for a rental property, at least. Now, some states will try to charge you income taxes if you sell an investment property in their state. I know Maryland does that. If you're an out-of-state investor and you own a rental property in Maryland, you go to sell that property, they will actually, the title company who does the settlement, they will set aside a certain amount of money in escrow to pay income taxes to the state of Maryland, even though you are not a resident of the state of Maryland. So the People's Republic of Maryland strikes again.
So what about, let's get into some of these states, and what are some of the lowest property taxes in which states?
Sure. So the 10 states with the lowest property taxes, we'll just go through them really quickly. So Hawaii has the lowest property tax rate. And then, we'll go through by tax rate, and then we'll also go through by actual dollar amount, because those are two different things, although there's plenty of overlap. So Hawaii, people would be surprised to know, has the lowest property tax rates in the country, an average of 0.30%. Then Alabama at 0.42%, Louisiana at 0.50%, West Virginia 0.53%, Delaware 0.55%, South Carolina 0.56%, Wyoming 0.57%, Colorado at number 8 with 0.63%, and then Arkansas 0.64%, and then rounding out the 10 states with the lowest property taxes is Mississippi with 0.65%.
Now explain that a little bit, the percentage that you used.
No, so that's just the percentage of the property value that the county collects in property taxes each year.
Okay.
So just to use a really easy example, if you have a property that has an assessed value of $100,000 and the property tax rate is at 1%, then you would pay $1,000 a year in property taxes.
Wow. Hawaii. I didn't expect that.
Well, so that's the thing. So Hawaii has pretty expensive real estate. So if you look at the average dollar amount collected each year, or in these states, Hawaii is not on the top 10 lowest dollar amount property tax states, but the rate is lower, and they can get away with that largely because the property values are so high in Hawaii.
Wow. Interesting. Makes you think twice, like maybe we should invest in Mississippi.
Well, a lot of the southern and Sun Belt states have seen some more inbound migration over the last few years. So every year, Denny and I run an analysis of uh, total tax burden among the states versus migration patterns within the states. United Van Lines releases a report each year that's it's great, it's super detailed about which states Americans are moving out of and which states they're moving into. And it's not a perfect correlation between tax rates and where people are moving, but there is a clear correlation. So, for example, 4 out of the top 5 outbound migration states where people are leaving, 4 out of those 5 are all on the top 10 list for the highest tax states in the U.S. So New York, New Jersey, Connecticut, Illinois. People are moving out of there in record numbers, and they are all on that top 10 list for the highest taxed states in the U.S. California and Iowa also both on that list. They're in the top 10 list for states that people are moving out of, and also in the top 10 list for the highest tax states in the U.S. So there's a lot of overlap there. And if you break down the average total tax burden in the top outbound states and you compare that to the tax burden in the top inbound states, there is a difference, a noticeable difference in the average tax burden. So for the top outbound states that people are leaving, the total tax burden averages a little over 9.5%, 9.51%. For the top inbound states, it is under 8%. It's like 7.9 something percent. And if that seems close, it's actually not as close as it seems, because the total range here for total tax burden, it's between 5 and 12% total, but almost all of these states actually fall in the 7.5 to 10% range. So there are a couple outliers that charge really low taxes or really high taxes, like Alaska and Delaware charge really low taxes, down the 5 to 6% range. And then you've got a couple really high tax states like New York that's like 12.5% total tax burden. But most of these states are falling in that like 7.5 to 10% range. So for the top outbound states to be close to 10%, and the top inbound states having a total tax burden under 8%, it actually is a pretty big difference given how narrow the range is for these states, at least as a total picture.
Have you ever, like I know here right now, especially like where North Jersey is and it meets Pennsylvania, we have a ton of people who have left New Jersey, moved to Pennsylvania, but still work in New Jersey because it's so close. I just recently actually sold a house to somebody who works in New Jersey and they wanted to live in Pennsylvania. Do you ever think that, like, would New Jersey ever lower property taxes? Have you ever seen a state or counties, or I've seen counties do it, but have you ever seen it like statewide?
Well, I mean, so again, property taxes are assessed at the county level, but so if enough counties lower their tax rates, then you'll see that the state average drop down. But New Jersey has the highest property taxes in the country, and that's whether you look at tax rate. New Jersey charges over 2% every year, 2.1% of the property value they charge in taxes, which is a ton of money.
Yeah.
And the average dollar amount, they're also the highest. They're the worst by average dollar amount too. I think the average dollar amount is like $7,800 a year in property taxes alone. It's crazy. So yeah, so 100%. People are definitely leaving New Jersey, and it is one of the top outbound migration states. And while I'm sure that tax rates are not the only reason why people are moving out of New Jersey, it's certainly not encouraging people to stay.
Yeah.
I mean, like,
no, and it eventually it'll affect house prices, home prices, which some areas there are already seeing.
Oh, so I'm from Baltimore, and Baltimore City, it's actually kind of unique. Baltimore City is its own county jurisdiction as opposed to the surrounding county. But Baltimore City charges way higher. They charge something like 60 or 70% more in property taxes than the surrounding county does. So when you look at the property values on the line, on the border between the city and the county, property values are something like $100,000 or $125,000 more across the street from each other because of the line. And now that's not just about property taxes. Some of that is schools as well. but yeah, I mean, so my mother, for example, my mother lives within like 1,000 feet of the border between Baltimore City and Baltimore County, and I mean, her home value is like six figures, say $150,000 less than the homes that are very equivalent homes that are 1,000 feet north of her. So I mean, it's crazy how these do affect property values.
It is. It is. And it isn't always true that the higher the taxes, the better the schools. That used to be something that was said in Pennsylvania, but it is definitely not.
No, Baltimore City is a perfect example of that. Yeah, right. Baltimore City has some of the worst schools in the country. They actually pay among the highest per student budget in the country. So yeah, no, there's not necessarily a correlation between school quality and performance versus property tax rates.
So let's talk about how this all affects cash flow, Brian.
Well, so property taxes, obviously does impact your cash flow. It's an expense that you have to include every month when you run the numbers on your on a prospective rental property. And by the way, we'll share a link here. If anyone is interested in looking at the data on migration patterns in the U.S., we'll include a link to where you can look at that and compare a couple interactive maps there as well. And by the way, Mary Jane said that property taxes are not as bad where she is as you might think, being in California.
And it's funny because I immediately thought California, probably super high.
Well, there are high taxes in California across the board. Like, as a total tax burden, they're up there. But yeah, so property taxes do impact you as a real estate investor. Like we talked about a few minutes ago, though, income taxes can also impact you as a real estate investor, even if you don't live in that state. We use the example of Maryland, where they will withhold your proceeds from your sale of a property if you live out of state, because they want to tax you.
That's just ridiculous.
They want to tax you on that income. So, but yeah, and it's not just property taxes either. If you, as a real estate investor who's looking at the country and trying to decide where to invest, you do want to take total tax burden into account along with these migration patterns, because this is all about demand for real estate, right? So, in places that have high taxes and where people are migrating out of that state or out of that county, that impacts the demand and the prospects for those properties to appreciate in value. Right. So, again, it's not a one-to-one correlation between tax rates and where people are moving. Like Vermont is a good example of a state with very high taxes where people are moving in. More people are moving into Vermont than moving out. But as a general rule, there is a pattern that the states with the highest taxes tend to be the states with the highest outbound migration rates. So just something to keep in mind when you're investing out of state.
We have a question from Michael. Can property taxes be negotiated during ownership?
Well, so you can file a you can, not a complaint, but you can file to have your property reassessed, the value reassessed, if you disagree with how the county has assessed it, because of course the county assessor is going to make it out like you're living in some huge mansion.
And if you improve a property, that's what permits to me are for. They want to make sure and see what you're doing so they can pop those taxes back up.
Yeah. So, but you can file to have your property tax assessment reassessed if you think that they've overassessed it, which of course they always want to do, right? Because they want the maximum dollars out of you.
Right.
But yeah, so that's actually worth doing, across the board. If you think that it's even close to being higher than it should be, go ahead and object to it. Usually it's just a form letter that you send into the county, and you send in comps and other documentation that reinforces your claim that the property is actually worth less than what they say the assessment.
And then Mary Jane, says, I've noticed that pre-tax cap rates on Illinois' investment properties are super high, but of course you can consider tax rates. Once you consider tax rates, the cap rate goes down. Have you noticed property tax rates affecting property valuation?
Yeah, so and that's what we touched on a few minutes ago about Baltimore City versus Baltimore County, for example, where the much higher property tax rates do have a heavy impact on property values. So yes, it can impact that. And when you calculate cap rates, you do need to include expenses like property taxes. The cap rate that should include all of those expenses other than the mortgage payment. It should include property taxes, landlord insurance, maintenance and repairs and property management fees and all those expenses. So definitely include those when you run the numbers.
And just to touch on the affecting property valuation one, I know we have an area in Montgomery County, and it's a little town, and they have ridiculous taxes, property taxes, and they're pretty close to Philly too, but they have an excellent school district, so people like to move there. And it is close to Philly, but their property prices have dropped big time, and I'll even have buyers see this beautiful house that's really inexpensive, and then I know, yep, but look at the property taxes, and they run immediately.
Yeah, I mean, you have to take a holistic view of your cost of ownership, whether you're a landlord or a homeowner, whenever you're looking at buying a property. So yeah, definitely include all of these expenses when you run the numbers. And by the way, I added a link in the comments here to where you can use our free rental cash flow calculator that does include fields for expenses like property taxes.
So is there anything else, Brian, that you can add to all this? This is interesting.
No, so go check out the article with the interactive maps. You can check out how your county compares to other surrounding counties and how states compare. It's fascinating stuff. And, don't be afraid to invest out of state. You are not locked into your home market as a real estate investor. It's easier than ever to invest long distance nowadays. So take advantage of tools like Roofstock and other. We've got a whole bunch of articles and tools and resources on our site to help you invest out of state. So yeah, get out there and check out some new markets.
And don't forget to check us out on the podcast if you've missed any of these live broadcasts. And feel free to rate and review us.
Yeah, please do. That helps get the word out. So on that note, we will see you guys next Tuesday, the Tuesday before Thanksgiving. Have a great week, and let us know what topics you want to hear about. Yeah, this is all about you guys and what you want to learn. So we'll see you next week. Have a great rest of this week.